Hey, welcome to Insights by Stormfield Capital. In this series, we break down what actually drives returns in real estate finance. Today, we are looking at when a balance sheet lender with in-house servicing is actually the right call for your deal. Most investors start by comparing rates, but the rate is rarely what makes or breaks a deal. It actually comes down to whether the lender fits the deal in front of you, because not all lenders operate the same way. That's where the source of capital starts to matter, and to figure out where it really matters, you need to be honest about what you're running. There are essentially two types of deals: cookie cutter flips and high friction complex deals. For straightforward deals, national platforms can work. The AVM hits close enough, the box fits, and the process moves. The source of capital and whether servicing is in-house or outsourced still matters, but to a lesser degree. But the moment your deal gets complex, a gut rehab, a tough permitting town, a micro market where one street swings the ARV, a national algorithm is not going to find that value. This is where regional expertise, true balance sheet lending, and in-house servicing start making a difference. So let us look at a real example. An investor in Brooklyn, New York was halfway through a 4-unit multifamily conversion. The project was financed through a national lender using a third-party servicer. Weeks passed waiting for the draws. The crew sat idle. After nearly a year of that friction, the investor refinanced to Stormfield. So Stormfield refinanced the existing loan and provided a $650,000 renovation holdback. Because the loan was serviced internally, inspections were scheduled quickly, and funds were released without delay. The investor completed construction in under 6 months and moved the property toward stabilization far ahead of the original timeline. The difference was not the rate, it was the structure. When the lender and the servicer are the same entity, there is no handoff, no ticket number, no stranger reviewing your file. There is just a decision maker who's incentivized to get your project across the finish line, and this goes beyond any single deal. Picture a duplex conversion going smoothly until a new inspector walks the site and flags the fire-rated drywall across the entire first floor. That project stops cold unless someone with real authority picks up the phone. Here is something most investors do not think about until it is too late. Say you have a $100,000 loan. You shop around and find a lender offering 0.5% lower rate. That saves you $42 a month. 42. Now say that same lender's draw process stalls your project for just 1 month. Holding costs, idle contractors, remobilization fees. That 1 month cost you around $3,500. The rate was never the risk. The clock was. When a national servicer freezes your draw, you are not talking to a decision maker. You are assigned a ticket number. The person reviewing your file has never seen your before photos. They do not even know which house you are fixing. Meanwhile, your crew walks. A balance sheet lender with in-house servicing bridges the gap with a single phone call. That is what real execution looks like. Reliability alone is not enough if it cannot move at that speed. When your project hits a snag, you are not filing a ticket. You are talking to someone who knows your deal and can act. So putting it all together, look for a trusted capital partner when your market is block by block, when your draw timeline cannot absorb third-party lag, or when the deal has any complexity a national model will not be able to read. If you want to see how we structure loans for your specific market, visit stormfieldcapital.com. See you in the next one.